What's up, everybody? Alexander, the day trading champ, and in this video we're going to follow up on our oil trade. Alright, we're going to explain to you why the drop is not over, why we will continue lower, okay? So if you want to go back and watch the first video, that's going to explain how we knew that this drop was actually going to take place, alright? But now we're going to go over why it's going to continue dropping, alright? So today, guys, we get a negative catalyst for oil, alright? And what is this? Well, it's the fact that oil production is going to hold steady. Now, it doesn't take a genius to understand this, right? Simple supply and demand. If oil demand is going down right now, right? Clearly, that's why oil prices are going down. More people are staying in. We got more countries locking down. The demand for oil goes down. So whenever now they're saying that they're going to keep the oil production rate the same, well, what does that create? It creates supply and demand imbalance where we have less demand but the same supply. Okay, what they needed to do instead was lower the supply for oil, and that would actually raise the price or be a positive catalyst for the oil price. But the fact that they're keeping it the same, okay, as you can see here, that is actually going to be a negative for oil, right? Which is awesome. It's an extra catalyst for oil to continue dropping. So what the ticker I like to use for oil, all right, I'll show you right here, is /CL. So we opened up just now about 45 minutes ago. The market opened. We're bouncing up to this SMA. Nice little short there, all right? So already showing some resistance here. You can see on the 5-day, 5-minute chart, the simple moving average, we've shown lots of resistance to it. Once, twice, 3 times, now 4 times, okay? So the ceiling is not too high for oil right now. So entering the trade, you want to enter any bounces, all right? Any significant bounces, you're good to go, all right? It's very simple. And add to your positions the higher oil goes here. And I'll explain to you, though, why oil can't go that much higher here. Now, if you don't know, right, in our last video, we pointed out that oil and dollar are inversely correlated. Now, on top of that, what is inversely correlated with the dollar? Well, let's point this out, guys. Let's go to gold. All right, and gold is inversely correlated with the dollar. Now look at this downtrend on the gold. All right, so gold can bounce up a little, but where is it going to be? It's going to reject its downtrend here, very likely, right? What are the chances that gold breaks up and breaks higher and breaks past this downtrend? It's not very likely. Why? Well, we're going to bring up the dollar, right, knowing that those are inversely correlated, and it's the fact that the dollar is staying above the 93.5 range, which is a very important level that we've determined in our previous videos. If you've been around the channel, you know that. So what are the chances here? What is dollar most likely to do? So the dollar can either consolidate or it can break higher, it can break out, okay? So if dollar's going to break out, what's going to happen to gold? Gold is going to drop, all right? Which would just further confirm with this downtrend we have here, right? It makes a lot of sense that, dollar has a high chance to break out higher, that the gold has very high chance to break lower, okay? So just eliminating the factor or the probability that dollar is going to be dropping here, right? Knowing that it's not likely to, right? Because of this very strong level we have here, it just gives a lot higher probability for gold to fall here. And if gold falls, then oil's also going to be dropping, right? Because that means dollar is going to be going up, all right? So hopefully I didn't just confuse the hell out of you. Hopefully it all makes sense. If you got any questions, just let me know down below, okay? But with that being said, I know that a lot of you don't trade futures. Alright, guys, what I've done pretty much now is brought to you the tickers that you're going to want to trade if you can't trade /CL. I know that was a big concern we had in the comments of the last video, right? And like I said, I highly recommend you go back and watch the analysis last video on how we knew this drop was coming, alright? But in this video, I'm just going to go over a couple of strikes you should probably go with, and I'm going to give you the alternate tickers you need so that you can actually trade /CL. All right, so SCO is going to be the volatility. What it is just an inverse ETF of UCO, which is the ProShares Ultra Bloomberg Crude Oil Exchange. Okay, now that's what the inverse ETF is. So pretty much you can see clearly here we're going up here on SCO, but we're going down on UCO. Basically, just like volatility, think of it like that. Now, look at the volatility ranges here. The next range or next level we have above this 18 level would be 20, 23, 24. Around that level, you can see it right here, right? That would be the next level. So when going with the oil volatility strikes, you're going to want to go with 20 or 19, or if you're scared of theta, or if you want to just buy some contracts that expire this week, all right, you'll want to get in the monies. All right, so in the money calls, these would be $1.70, and you can see that there's a lot more contract liquidity on the call side than there's put side. There's not many people betting against oil right now, or at least the volatility, right? So you can see that the tides have completely shifted, and now all of a sudden oil is bearish, right? And like I said, nobody was talking about oil going down last week. It was only us before it happened, all right? And that's where money is made. That's why our contracts are so profitable right now, is because we caught the move before it happened, all right? And that's when options are going to be underpriced, is when everyone doesn't expect it, all right? When everyone knows something's dropping, then the contracts become a little more expected. Luckily, they're actually not too overpriced right now, and that's why I'm saying it's not too late to get in. Why? Because look at the ranges here, guys. The next range, if we break above this range, is going to be all the way up here at 23. Now, if we break up to that range, what's going to happen to the actual oil funds, all right? Well, oil funds are going to drop to 25. 22.5, all right? And although it's not going to be a crash like last time when we went below zero, guys, we don't need a significant move to make some significant money on oil, and that's what's so awesome about these contracts and these funds, these indexes that we're going to be trading, all right? So the tickers you're going to want to use if you want to trade oil, right? Maybe you don't want to trade volatility. These contracts are a little bit less liquid, I would say. So let's get into the alternate tickers you could be using to trade for /CL, and that's going to be USO and UCO. Now, both of these are highly liquid. You're going to have no problem getting in and out with these contracts, and you can tell that these are the same as dollar WTIC, right? And dollar WTIC, if you don't know, is /CL. For some reason, the tickers are just different whenever you put them in stock charts. So you can see here that everything's the same. RSI here is 36, but on UCO and USO it's 35. We're both below SMA, and we're dropping on all three of these charts. So they're the exact same thing. You can go with any of these if you want. Now let's go with UCO. Why? I'll explain to you right now. The volume is a little bit lower. I checked UCO. It's got 9.9 million volume. But the thing about USO is that it's actually got much more liquid contracts, a lot more volume, open interest. So these are going to be a lot better, especially if you're a little finicky and you don't necessarily trust the process all the way and you just feel the need to get out. This is going to be a lot better for you. But ultimately, the trade will go our way, all right, just like we pointed out last week. And like I said, there's still more meat on the bone, all right, especially with the fact with, let's go back to SCO, right? Look at the volatility range. So we're at the topping level for the range. At least the current range, right? But what do we get now, guys? Now we get the catalyst. All right, video cut out. But now we're going to get the catalyst that's actually going to push volatility higher. All right, and that's the catalyst of them not cutting back on oil production. All right, this goes hand in hand, right? Obviously, with the double bottom we have here in oil. Not only have we actually broken below this double bottom here in oil, but now, like I said, we have this catalyst that they're not going to cut back on oil production. So what does that do? It just furthers our chances of a drop lower here. And on top of that, the next range for oil would be down to this 23 level on USO. All right, so if you're targeting a move down to 23, all right, in USO, or 25.3, all right, just go with the 26 of the 25 strikes, all right? Especially if you're trying to, put together a trade this week. You don't want to wait 2 or 3 weeks, all right? Just go with some 26.5. Just go with the in-the-money strike for this week on the put side of USO. All right, those are going to be fully liquid, and they're going to be, good to go. You'll be able to make some money off of those this week, all right? Like I said, you're going to want to add to your position as gold rises, okay? So just be paying attention to gold. All right, just know this is the danger zone for gold, and this is a great time to enter in for oil. With that being said, I keep these videos as short as possible. I try to give you the most information I can. If you found it useful, make sure you drop a like and subscribe to the channel, and also turn on the notification bell so you get notified on trading ideas and plans like this. We'll have a new video coming out soon. We're going to be going over the earnings, and most likely this week is going to be a little more observatory, if that's a word, and we're going to definitely be ready for the next week after that, because that's when things are really going to start ramping up. With that being said, if I got any great trading ideas or anything, obviously I'm going to let you know. So like I said, be ready for that. And if you're interested, we have a Reddit community. I'll leave it down in the description below, and you can join that if you want to. We go over awesome trading ideas there, and we post some cool statistics and just overall things that could definitely help you if you're day trading options. With everything being said, I hope you found the video helpful. I hope you learned something from it, and let me know if you made it to the end of the video. I'm Alexander, the Day Trading Champ, and I will see you guys on the next one.